So for anybody who doesn't already know, I'm Lindsay LaBonte, branch manager over here at the Applied Mortgage team of HarborOne Mortgage, and I'm joined today by two special guests, Bob Petrelli, my colleague, and Jen Felch, who's up in our corporate office at HarborOne. How you doing today?
Good, thanks.
Good.
We'll act for the recording like we didn't just ask each other how we're doing. So we wanted to just go over some changes and challenges that have been happening a little bit in the financing world as far as condos go. Condos always have their own set of underwriting guidelines, and depending on the loan program that the buyer is using, everything's going to be looked at a little bit differently. One of my favorite parts of being a part of the HarborOne Mortgage crew is that we have an in-house condo underwriter who's joining me today, Jen. And I think I said that title correctly and compliantly. So whenever we have questions about condos, we've actually got a go-to resource, a phone call or an email away, which is huge for us. And then we're going to go over just the typical routine items that we kind of look for anyway with condos. And then we're also going to talk about the changes and the challenges that have been coming up on the master insurance side of the puzzle as well. So Jen, can you just kind of start off with all right, I'm a listing agent or I'm a realtor and I'm going to be listing a condo, or maybe I'm a real estate agent working with a buyer. We know the lender, if the buyer needs financing, is going to ask for certain things. What preemptively, just briefly, a lot of people on the call may know this, but what are the things that the agent should kind of have gathered?
Sure. Yeah. So a best practice would probably be to gather together the recorded condo docs if they're available to the agent or to the seller on maybe a portal that the HOA might have, a budget. And I always say to grab the condos meeting minutes. At least the last few months, we are collecting them on the lender side, but it's also a great tool for the seller to distribute to the buyer. The buyer's going to want to look at these along with like the budget. Those are things that the buyers can review kind of on their end and see if they have any questions or concerns. The recorded docs would probably be more for the lender unless there is a buyer that wants to read through them. But those are the two more important. And nowadays, with the changes going on, another great practice would be to collect that master insurance certificate. Even just a blanket certificate, just to see what is in the policy and what is covered and what is not.
Awesome. And I will say I'm just having flashbacks because when I started working for my dad originally when I was 16, one of my jobs was pulling condo documents from the public records and getting that all together because, back then we had actually physical files. So I had a drawer, I don't have it anymore, but we had a condo drawer where we had most of the condo documents on the condos in our area that we tended to work with. And I'm like, if I start sweating, it's because I'm envisioning those 5-inch thick files that
Yes.
I'm sure your dad had them too. So for those of you also that don't know, Bobby and I are generational loan officers, or whatever the term, legacy loan officers. So Bobby's dad started off a business and he's grown into it, and I had mine. So anyway, totally digressing. But Jen, you were saying budget, condo documents, insurance, and meeting minutes. Any
Yes.
tips or tricks, just little tidbits? You mentioned the meeting minutes. That's huge. What about as far as the budget goes? Like tips that someone should just kind of look out for?
Yeah, so you're not going to get too detailed in the budget as a buyer. They're just going to probably look to see what the condo association is paying out for expenses. What kind of income are they bringing in? The biggest thing that as a lender that we look at and that a buyer or a listing and buying agent can look at is the reserve line. So on with Fannie and Freddie guidelines, needs to be showing on the budget a reserve line of 10% of the HOA income. So that can be confusing to some because sometimes they think it's 10% of the budget itself. which is usually the expenses, the total of the expenses, but we actually need it to be the total of the income, the HOA income itself. So that's kind of like a quick like glance when you're looking at it. That's kind of what you want to look at. Also, I do want to point out if the HOA has a loan, the loan payment has to be subtracted out of those reserves if it is included on the same line. So that's just something else that sometimes comes up and people aren't aware of.
Okay. And I would assume also, oh, go ahead, Bobby.
No, I was going to say, sorry, you can finish the budget.
What about special assessment? Anything? I don't know if that would be noted on a budget actually, but
so sometimes it is. Sometimes if it's added mid-year, it's not on there because it was approved before assessment was, started up. So sometimes it can be there. And if it is, then that's a great point for the buyer to look at and question and say, okay, oh, I see this. How much is this going to cost a month? Does my unit still owe on this? Sometimes they have already paid, the seller might have already paid off their units part of the assessment. So it's a good thing for the buyer to know.
So as far as, let's say the meeting minutes that you brought up, what's like a red flag from the meeting minutes?
I don't know, like maybe I guess if you want to call it a red flag would be if the meeting minutes are talking about repairs or inspections being done. If the repairs are a safety issue or something to do with the structural issue or something like that, that work might have to be complete before a buyer can move forward with financing for the condo to be approved with the lender.
And are meeting minutes something, I'm actually learning this right now. Are meeting minutes something that is typically asked for across the board on all loan types?
So yes, it is
Okay.
now for a couple years now. Ever since we've been lenders have been having to look at deferred maintenance.
Oh,
and
yes,
special
I did know that.
assessments.
Okay.
Yeah.
Yep.
So now
that's a
now
change.
it's across the board. We're asking for it. Our third party, if we have a third party that collects our documents, they are asking for them. And I have always told buyers to ask for them. So it's always kind of been, I'm sure it's like more on the agent side back in the day. But now the lenders are requesting to review these as well.
Awesome.
And this would be a difference between like a full project review and a limited project review, right? And we won't get into those differences today, but
it's actually across the board. It's with both reviews.
interesting. Okay.
Yeah. Yep.
And for those who are listening in that don't know what we just mentioned very briefly, that change that happened a couple of years ago, can you just explain that? Because that actually sort of goes hand in hand with the insurance piece that we're about to talk about.
Yes. So back in December of 2021, there was a Florida condo building that collapsed. And when that happened, Fannie Mae Freddie Mac have been reviewing and kind of tightening up their guidelines to make sure that condominiums and their associations are appropriately addressing repairs, addressing issues, addressing regular maintenance to make sure that no large catastrophe happens again, or anything that can be helped, anything that can be regularly maintained is done. So they have been delving into repairs needed, when was the last inspections done, and things along those lines.
Good to know.
Yeah.
So what about the recorded documents? Any tips, tricks, brief things there that agents should be aware of that lenders might be looking at?
Not really. Only that if they collect these documents, make sure they have all the pages. Make sure they are recorded. Sometimes we get copies that they're not recorded. They are sometimes not even signed. And we do need like the fully executed, fully recorded copies. If there's been amendments done throughout the years, those amendments are needed as well. So it's more just to make sure that they're, in full and complete.
Perfect.
Yeah, I think the biggest thing I ever came into contact with the recorded docs was there was a project that had more phases scheduled, and then they just stopped doing them, but never put any documents in saying, we're done with what we're going to actually do.
Yes. Yep. And that could be confusing when someone's trying to look for these additional units when it's not stated anywhere.
That could potentially be a whole other webinar, new construction condos, which we do also help with, and we have a great non-warrantable product as well. So for those that are out there listening to, just keep in mind, call us. This is like a very quick overview, 20-minute webinar kind of thing. But any questions you have, whether it's a person we're going to work with or not, or you're about to list something or whatever, it's on your radar, just call. It's always easier to take care of stuff in advance, as we all know. One question that was in the chat I just noticed was back to the meeting minutes. If a condo association only meets annually or semi-annually, are those minutes okay, or do they have to be on a shorter time frame?
Yeah, no, those are okay. We are not here to tell the association how long to meet, how often to meet. So when we ask for, let's say if I ask for the last 6 months, if they meet annually, then I would just ask them to provide the last annual meeting minutes, whenever that was.
Okay, so that could be okay if they do.
Yes.
I have a question coming in on my text and on the screen, but I think the text one we actually just had answered previously. So this is great. All the technology. We were thinking of streaming live over Facebook, but I don't know how I would monitor different feeds there. I have to do a practice run. Yeah. So what about the condo insurance changes? Jen and Bobby, you've run into this a little bit more. So if you have scenarios, questions, whatever, we can just rap about it a little bit.
Perfect.
All right. So with the insurance changes, there was a change within the past, I don't know, somewhere within the past 12 months. I don't know exactly. And so Fannie Mae and Freddie Mac have kind of tightened up on their regulation and their requirements, I should say, for the deductible allowances and how the cost of the deductible, how much the deductible can be. So the kind of new rule in place is for the building dwelling amount of the master insurance. 5% of that is the guideline. Now, if you have a deductible that is per unit, you have to take that building amount and divide that by how many units are in the association in the condo. So now when that happens, if the deductible is higher than that 5% per unit amount, it is not meeting the requirement for Fannie Mae Freddie Mac. So that's what we have been running into the most in the past few months this year.
Yeah, it's coming up a lot. It seems, especially where I am, like on the South Shore, where there's a lot of condos and things like that. You're seeing everybody knows insurance costs have gone up, cost of buildings gone up, all those things. So, you have the condo associations that, they get their quote in from however it flows in through them, whether it's a management company or direct, and they're faced with, okay, your cost of your insurance is going to skyrocket, which means your condo fees are going to skyrocket, or we can increase your deductibles and make it more manageable. And a lot of them have chosen to increase the deductibles without knowing the effects on the lending side, on the back side of it. So what are some of the solutions that are, available to combat that?
Yep. So the solutions, this is all, so if a deductible is per occurrence, then we are not running into the issue as much. But so this is more for when there is a deductible on the master insurance that is per unit. Okay, so that's kind of what we're going to talk about the most. The ways to kind of fix this, kind of be able to move along with the loan. The association can always decrease that deductible amount if available, if it's even available, because I know a lot of times that is the struggle that is out there that we're hearing from the insurance companies and the HOAs.
And they'd have to go back to the board, to the HOA, and they'd have to get the quote from the insurance company, go back to the board, get it approved. So again, you guys that are listening in, that's why this is a good thing up front. If you get a listing for a condo, get the master insurance policy at least send it over, have it looked at. We can do the math.
Yes.
And then at least you could put that ball in process.
Yeah, I mean,
Yeah.
the best time for it is in your, if you're a listing agent in that pre-meeting while you're trying to get the listing, I think you can probably separate yourself as, somebody that really knows their stuff when you're asking about this and saying why, and if you get something that you're unsure of, we're happy to take a look at it for you.
Yeah, the sooner the better. I'm letting like our loan officers know if they want to collect this as soon as they have like the purchase, the purchase contract or the offer even. When they get that, ask for the insurance cert, and I'll look at it even before it's just becoming a file, or just when the offer's coming in, or it might not even be accepted yet or anything like that. But the sooner the better.
Can we just do a sample math? I'm like I gotta see it. So let's say I'm an agent or I'm a seller or whatever, and I get my master insurance policy, and you said the dwelling coverage is what to look at.
Yeah, the building, we want a master, but yeah, building
Oh,
coverage.
sorry, on a master.
Yeah.
Okay, yeah, and that's important too. This is the master insurance. This is for the whole condo association. So
Yes.
that coverage, let's say it's 5 million. Can I just
Okay.
make up numbers? Okay.
Yeah.
So it's 5 million. And then we would want to look at the deductible amount, right? Let's say the deductible what's a deductible typically, if it was that big of a policy?
Well, I think you can look at it this way, Lindsay. If it's per occurrence, then that per occurrence can't exceed 5% of the 5 million, which would be $250,000.
Okay.
And then if
So we want to
go
take 5 million by 5%.
correct.
And that's
And
250.
if it's a per occurrence. And for people out there, and Jen, you can correct me on this, like per occurrence means like there's one for the whole association, right? So that you have the association as a whole, there's a claim, and it's pretty simple. You're not separating it out by unit or anything like that. It's just the association has a deductible. In this case, it can't exceed $250,000.
Yes.
So if then, you're looking at as per unit in this 5 million, how many units are in your make-believe condo association, Lindsay?
200 would that be a lot? That would be a lot,
Yes.
right?
We'll say 20.
Let's say 20.
So we
I was
take
shooting for the stars.
we do the so then you would take if it's a per unit deductible, then what you would look at is you look at the 5 million dwelling coverage, you divide that by 20, right? And you get 250,000 coincidentally. And then you would then take that 250,000 because that's the per unit coverage is what they're basically saying. And you multiply that by 5%. So then in that instance, your per unit deductible could not exceed $12,500.
Okay.
So
Yeah.
that's how you would do the math on it.
So now let's say we have that in that example, there's a 10,000, an all peril $10,000 per unit deductible. So that would be acceptable because our 5% is 12,500. So we're under our 5% maximum. So, but now let's switch it a little bit and say that we have an all peril deductible that is 20,000 on this example. That is where we're seeing that's the issue. That is not acceptable. The fixes would begin you can lower the deductible. You can try to touch the building amount, but I don't think that that's going to work as well. Like it's not really probably an option in a lot of instances. A workaround that we're seeing the most is an endorsement that the insurance agencies, some insurance carriers have. It's an endorsement where and I'm just going to read a little bit here just because I want to make sure I get the verbiage right. But it's the sum of all per unit deductibles is capped at no greater than 5% of the total building value of the policy limit. So when they have an endorsement, when the insurance agent is able to put an endorsement like that onto the master insurance, that is acceptable as of right now is for Fannie Mae Freddie Mac. That is being accepted, and then we can move forward. And there is also another caveat into here. So, but did you have any questions, Lindsay, on like the numbers? Like, does that kind of help
Yeah,
make sense?
no, that helps. So in the chat
Yeah.
box,
I'll
Bobby,
put together an email and an email to
you want
everybody.
to
I think
email
it'll
it?
be
Okay,
because the
that's a
chat
better
is going to
idea.
disappear anyway. So I'll put
True.
together an email for people and I'll email it out so you have
Perfect.
it all in your email.
That's great. Thank you.
So I'm gonna throw a wrench in here now. And another fix would be, so we talked about how our example deductibles were all peril, which is basically any and all insurance, issues that come up that are not specifically labeled by the insurance company. And again, I am not an insurance. I do not have a license in insurance. I am not an insurance expert. This is very layman's terms. So please take it as it is. But so normally you can see, I'm just going to do an example. There's an all peril, but then there was on our example here, Master Insurance, there's a ice dam deductible. Okay. And let's just say our ice dam deductible was 20,000 per unit. It's not in the same category as our all perils because it's geographic. So if it's in New England, okay, so we have a condo, it's in Northampton, Mass, and it has this information on it. The ice damming deductible, even though it's over our 5% allowed amount, it can be covered under a borrower's, a unit owner's HO6 insurance policy. A geographic deductible is the only kind that can be covered under this and be able to kind of move forward with the loan. Right now in New England, the only geographical deductible peril that we know of is ice dam. Water is not one, wind is not one, and nothing else is. So it's just ice dam, and it has to be separate ice dam. Sometimes they will be kind of, in with other deductibles. It's not, if it's all in one, then it's not acceptable. Usually when it's all in one, you just see all perils. And at that point, that's not geographic, and we cannot cover it with the HO6. That is when we need an endorsement to the master insurance itself. We have to adjust the master insurance.
Now, have you seen any situations where we get the initial binder and it says like all peril and they just lump it in, and then we ask a little bit more questions and they're like, well, actually, there's like two separate deductibles combined into one. Do you ever see that?
No, not usually, because even if it was, the sprinkler system and water, and then there was like ice dam as well. If the sprinkler system and water is per unit, then we're still run into an issue. It's not allowable to cover with the HO6.
So bottom line with all of this, because obviously you can see the math gets technical, it's specific to the condo association, it's specific to the insurance policy. Jen, it sounds like you're saying the number one thing in summary really would be get that master insurance policy, get your hands on it up front, and have it reviewed by a lender who you like. Contact us if you'd like to, and we can take a look at it. And then at least that way, if you're fielding offers where your buyers are going to have financing, you'll know whether or not the association needs to change anything.
Yes.
And you'd know that ahead of time. Or you just hope for a cash offer, which, is great for everybody else. Not so great from the mortgage side of things, but hey, that's okay too. Any other tips, tricks, questions that you would have people, have prepared when it's time to buy or sell a condo?
Not really. I mean, I think we kind of went through it. If a unit owner or a listing agent wanted to, they could ask like the association for a list of repairs that are maybe going on in the association. If the seller hasn't been to a meeting lately or didn't have access to meeting minutes and they don't know if there's anything going on or upcoming, they could ask if there's any assessments, either current or pending, Of course, the seller would know if there's a current assessment, but if there was something pending, they may not know yet. So that's always good. Like, hey, I'm thinking of selling, or, or just think that to themselves, but then just request and ask their association for that info. That can always be a help. Yeah.
Awesome. And I also just want to thank Jen again, because we've had people too, whether it's an existing condo or people setting up new construction condos, where attorneys have called us about condo documents and just said, hey, how can I set this up so that it's going to be easiest to finance? And again, all those scenarios, mortgage, okay, disclaimer, mortgage guidelines are always changing. It's always different from one product to another, but we can at least try to help preemptively give some ideas and have everything flow more smoothly in the long run. So, Bobby, any other questions you had for Jen that have come up?
No, I think those are the main things. Yeah, I think that's the main stuff that
Awesome.
yeah.
And Bobby will put together just that little recap of the $5 million building coverage. 5% of that was 250. 20 units in the project would be a maximum per unit of 12,500. Did I get that right?
You did.
There
Nailed
we
it.
go. We retained something. All right. So forget about me saying 200 units originally. We'll do a smaller project. Anyways, thanks everyone for listening in. This will be recorded. We'll send out the recording. We'll send you that math summary and just some bullet points of here's different ways we've helped to mitigate these insurance challenges. Tune in anytime we do these webinars, usually monthly. We also have first-time home buyer and repeat buyer webinars. So anybody that's listening in, if you've got, database of customers and you just want to get them a little more education, we offer those webinars completely free and on the customer's own time, which is great. And then any other items, challenges, opportunities, whatever that you're running into that you want to hear us talk about, let me know, and we'd love to have you on as a guest too. So whether it's an idea for a topic or actually something you want to join us and talk about, we can do that here live and recorded as well. Thank you, Jen. Thank you, Bobby. And thank you to all of our listeners.
Thank
Thank
you.
you, guys. Thanks for having me.
Thanks, Jen.